Futures this morning, there's a triple-digit gain in the Dow. S&P pitching in with 15 points, and the NASDAQ up 52. For more on the markets, let's bring in Saira, Malik, Chief Investment Officer and Head of Equities as well as Fixed Income at Nuveen. I think at Nuveen, a lot of times I think more of fixed income. What do you want to start with today, Saira? You extending location or duration with bonds. Is it attractive right now, do you think, if we're in a kind of an easing cycle with the Fed?
I think Fed cutting rates is positive for fixed income. Yields are very attractive here. We're focusing on credit over duration, though, and particularly like municipal bonds because of the strong fundamentals. States have very strong rainy day funds and also high savings rates. So that's the sweet spot of fixed income for us. Secondarily, we also like senior loans and emerging market debt now that some of the Liberation Day issues are behind us.
So tell me what you mean by that. I mean, you want higher credit, or you're ready to step out and you think things are fine, and you think triple B plus, if that's still a rating. It's been a while, but would you go that way, or would you go more quality?
We go higher quality credit. So areas like senior loans, if you look at 8 of the past 9 rate cut cycles, senior loans actually performed very strongly. And we like areas with strong fundamentals, that's municipal bonds. So definitely looking on the quality side of credit, but then taking a little more risk in the emerging markets where that area was weak earlier this year because of Liberation Day and tariffs. And now tariffs, of course, are not behind us, but the markets have settled somewhat now that we have more information on tariffs and clarity in terms of where they're going to land.
Are you worried about the economy, and that's why you're going up in quality?
Well, definitely the employment markets are showing that the economy is starting to slow a little bit, but the 3 areas that we're focused on right now in terms of where we're investing is the government shutdown, also the pace of Fed rate cuts, and third quarter earnings. First looking at the government shutdown, I think usually that's not a huge impact on the markets, but the tail risks here are if furloughed jobs become eliminated jobs, that could have an impact on the job market. And also, because we're not able to get economic data like payrolls today, and we may not get inflation data, the Fed is going to be flying blind a little bit when it looks at rate cuts. So as you know, we have an FOMC meeting coming up later this month, October 28th, and the Fed may not have enough information to decide if they need to cut rates by 25 basis points. And then finally, on the bright side, third quarter earnings, I think, will come in strong. Year-over-year consensus is for 8.8% growth. I think that we can beat that, and it'll be led by tech stocks. They account for about 3/4 of earnings growth coming into the fourth quarter, into the third and fourth quarters, and I think tech will lead the way continuing from here.
So you don't ascribe necessarily to all the articles we've seen written about valuation. Valuation doesn't necessarily mean we're headed lower, but it's not cheap, is it, the market?
U.S. markets are definitely not cheap. They're trading at a premium versus history. But the reason for the premium on the U.S. markets and what the U.S. trade is really tech and AI. And I'm curious, Joe, did ChatGPT get back to you in terms of whether it is the poster child for the bubble or not?
Never did.
Okay. Still thinking that one through.
I mean, it didn't give me an answer. It gave me a whole lot of.
From perplexity, it's probably wrong. I'm kidding. He's going to be on later today. They need to tighten up those algos or something. I'm still worried about Gigo. It seems like they scrape a bunch of crap and half of it's wrong. So we're missing the step where it does something like Andrew Ross Sorkin is able to do. High level analysis and intelligence to collate and aggregate all these disparate facts but come up with something insightful. Does it do that? Have you found anything that does that anywhere?
No, you have to come up with it. But if you come up with the idea,
no, I'm not going to be able to do that.
It will then actually connect dots for you, meaning it can go out and try to find the things that would support.
But it'll get better, right, Andrew? We need more data centers,
right? Is that the problem?
More energy. We need more data centers. We need more.
But would it find things that may or may it would support it that may or may not be right?
I found actually, I mean, I think ChatGPT, as I've said, and I think Gemini increasingly has gotten better to the point where, for the most part, the kind of things that they would, the kind of supporting material that they would create. Again, one of the things you have to be very cognizant of is asking it to provide links, which I think
everyone can double check.
I think everybody would want to check, and also, you can actually tell it do not give me anything unless you've double-checked it. Meaning, if you actually treat the thing, yes, if you treat the thing like a person, where by the way, you may not trust a person to actually get it right, but if you say, look, only bring me facts that you've double-checked, it will actually double-check them. And by the way, if you talk to it like that, I mean, it's sort of a very strange thing.
There's a meaning to it.
No.
It will actually do it.
It's early.
But if you ask some intern to go get you the facts, they're going to have messed up facts too, is the truth. And so, but if you say to the intern, do not bring me anything that could possibly be wrong, this thing will actually do that. That it will do. But it actually has to do with.
Why don't they put that into the algorithm?
Sarah, I think
how you prompt it.
Sarah, I think you kind of brought this. You brought it up and said, did it get back to me yet? And then we went off on this. You got any final thoughts? Because I think we ate into some of your time, and I apologize for that. But it is Friday, so we're probably all pretty happy. But so you figure stay the course in stocks and bonds.
Yeah, stay the course. I think that speaking of AI, this time is different versus the late 90s. I was a small cap growth investor in the late 90s. I remember that bubble. The companies this time are different. They're larger, they're profitable, and the users of AI, which is corporations, are putting that into their workforce right now. It's increasing productivity, increasing revenues over time. I think the issue would be if we hit an air pocket, because we are wondering, is there ROI on all this billions of dollars spent on AI going to make sure that we realize that in a timely manner? But while there could be an air pocket, the structural trend of artificial intelligence is alive and well and here to stay, and that will drive U.S. stocks higher. Actually, if you look at the S&P year to date, when it's up this much, which is about almost the mid-teens at this point, usually markets end higher by the time the year ends.